My name is Rina Hicks, and I'm the Operations Director at FIDA Investment Bank. I am a passionate investment banker, financial advisor, a certified professional coach, an author, a speaker, and all-round just multi-passionate person. I've been in the industry for the last 19 years and really excited around issues to do with investing and the opportunities that are presented on this continent of Africa. So FIDA Investment Bank is an investment bank that has been around for 29 years. It's locally owned. We also have FIDA in Rwanda. And the services that we offer are varied. We say that we are here to offer and link investors to opportunities. So for retailers, for high net worth, for institutions, it doesn't really matter. We deal with everybody and we offer everybody opportunities. So that's on one end. We also offer companies the ability to raise capital. We do fairness valuations. We also do M&A, with what we call mergers and acquisitions. So if a company wants to acquire another business, help them find that business and carry out the transaction. And all transactions that we do are not only listed on the stock exchange, it's both on the stock exchange and off the stock exchange. Companies that are looking to raise capital. So we currently have a business that is in real estate that's looking to raise money to be able to do a certain big business. We're helping them to raise that money. And for retailers, we offer stock trading. So that's buying shares, bond trading, buying of treasury bills. And the assets are not necessarily only in Kenya. It's Kenya, Uganda, Tanzania, Rwanda. If you want in the US, we have those available as well. Derivatives, so all of the, let me say, financial assets we do get involved in, but really we're about linking investors to opportunities. So risks are everywhere, and I think it's a great question because you find a lot of times many people in this country just find an opportunity and they get in because of returns and they don't think about risks. You know, people get their eyes scanned because you're going to get 7,500 a day or something. You know, you sign up for so many different things because of returns. Risks are very important to think about. But I also must say that everything has risks. So with regard to the stock exchange and the stock market specifically, when you're investing in a stock or a share, you're buying a part of a business. So if you buy a share of Safaricom or EABL or East African Breweries or Safaricom, you're buying a part of that business. So if I buy equity, I own a bit of equity. So when equity does well, I get a share of the profits of that business. So it's a benefit. Another benefit is if I buy equity at 35 shillings and in a year it goes to 40 shillings, I make what we call capital gains, 5 bob from the money I invested. So it gives me the opportunity to use those gains from dividends or capital gains to grow my wealth, to be able to plan for retirement, to save for education, to save for whatever it is I want to do. The thing about the stock market, however, because it's a business, it works within a context. You know, we're in a certain country, we're in a certain continent, the company is within a certain industry. And so it's important to have an understanding of what industry am I investing in? How is that industry doing? What's the politics around that industry? Okay, then let's look at the business. What is the company? What product or service does it offer? Are there other competitors out there that are offering something similar? Is it substitutable? Or have they been able to find an innovative way of providing the service or product that makes them stand out from the rest? Who's on the board? Who are they? What have they done? What's their track record? Who's the MD? Those are questions you have to ask yourself. You don't just say, I'm buying Safaricom because it's good, or it has gone to Ethiopia. That sounds good. Okay, so how is Ethiopia? What's the landscape there? How is this company going to do well? You know, so there's many questions and you have to do research to be able to understand what the risks are, but also if you understand the risks, then you know what you're doing. The danger is investing without knowing what you're doing. And when you do that, then when you fail, it becomes you get jaded. And you're like, the stock market doesn't work. I'm never going there before. Again, I'm sorry. And so it just doesn't work. But if you understand these are risks, for example, Mumias, I remember there was a very big challenge. It no longer trades. And it's because it was poorly run as a business. If you go to Mumias today, it is like a museum, not even a museum. It is like completely deserted. But because of poor management, but the signs were there. And so you have to always check, even when you invest, It's run by humans like you and I. And so who's running this business? And people can make crazy decisions. What decisions are being made? Okay, what's the strategy this year? So the beauty about all of this, it can sound overwhelming, thinking about, oh my gosh, do I need to know all of that? So it is important for you to invest in a company you like. Because if you like it and you're interacting with it, it's something that you will naturally gravitate towards. You'll understand it because you're already interacting with it. So that's the first thing. Just invest in something that you already like, because following up and knowing what's happening with that business will be easy for you. Secondly, you're not alone. There's others in the industry that, like FIDA Investment Bank and others in our industry, who do research, and we have teams that sit and do nothing else and research the businesses to understand, okay, this is what the company is doing, this is our view, but you don't listen to one person. Listen to different analysts and then make an informed decision. So that's how you go about mitigating those risks. Yeah, so you analyze everything, hear what others are saying, and it's how life, that's how we do it with life. If you're trying to make a decision on where I'm going to travel to in December, maybe I want to go to Mombasa. Do I go to Diani? Do I go to North Coast? Do I go to Shimoni? Okay, so what hotels are there? Which one has a better experience? Which one is cheaper? Which one is more expensive? So in the way that you manage your life, you can't just make a decision without considering what the options are and what would make sense for you, what is of best value to you, and it's just the same concept. Some pointers, I think the first pointer I will talk about is time. Because a lot of times people want to make returns really quickly. I want to double my money and I want to make 3 times within a very short period of time. Especially for those who are younger, who are listening to this, I want to encourage you to know that you have to, it's a process of learning, a process of discovery and consistency. In fact, somebody that I really admire said to us once that wealth is equal to consistency, discipline, and time. And that's it. If you decide you're going to invest today, you can't invest, it's not one shot. It's like exercise. You don't run today 10 kilometers and then you become this amazing 6-pack, sort of a person who's an athlete. An athlete does exercise every day. They eat a certain way. There's a certain way they behave. And so the same way with creating wealth. Some research that was done in the US some time ago showed that it takes on average 28 years for people to create wealth, like real wealth. And so give yourself time and just know that eventually I will get there. Now, the other thing I want to share is that you don't have to have a lot to start. A lot of young people sort of think, let me just wait until I have 100,000 shillings to start. But I'm like, no, start even if it's 100 bob, 1,000 shillings, and try and figure out where can I generate an income from? What do I do to generate the income? And as the income comes, put aside and decide that I'm going to put aside X% of every income I earn. And that's how you'll be able to become consistent and disciplined. I did some math, and today if you decided to invest 5,000 shillings, just 5,000, and decided every month I'll put aside 5,000 shillings. If you invest 5,000 at 10%, which in this season and time when you can get 15% tax-free, if you can get just 10% consistently for 35 years, you will end up with 17.8 million shillings. What's interesting to note though, when you look at that 17.8, the actual cash you will have paid out from your pocket is 2.1 million. The rest, 15.7, is all interest. That's the power of compounding interest. Wealth is equal to consistency, discipline, and time. It happens eventually if you just remain consistent. So don't wait, it's not microwave, but it will happen. So those of you who are beginning, I think it's a great place to be because it's, clean slate, you're starting afresh. My advice to you would be to just draw a triangle. Draw a triangle and divide it by 3. And the bottom of the triangle represents your needs, your basic needs. You need to have a roof over your head. You need to be able to put fuel in your car. You need Wi-Fi, the basic needs that we typically have. And then the middle part of the triangle, just put in your day-to-day needs that make you feel like life is worth living. Getting my hair done, getting my nails done, going to the barbers, buying a pair of shoes. There are certain things that, paying for certain school fees for my child because, it's important that they go to that particular school and not, say, a public school. So there's a certain lifestyle that we have. And then lastly, you want to be able to create real wealth. So that's the dream. Now, every asset that I own must do these 3 things. And it's important for you to just think through this as you begin. The first thing that your assets must do for you is enable you to pay for your basic needs. You never want to be in a situation where you can't pay rent, or you're being kicked out of your school, or can a power switch off the lights? You want to be able to meet your basic needs. The other thing that your assets must do for you is enable you to sustain your current standard of living. That's the second level. And lastly, your assets must give you the opportunity to create wealth. So as you begin, you're not looking to be everywhere on that triangle. You're looking at, how can I create a safety net first? So the first thing I'd say is save and put that money in a safe opportunity that can give you some meaningful returns. So an example, you could decide, I'm going to open a money market fund and start with that to build my safety net. Or you could decide, I'll join a circle because I want to eventually be able to borrow and buy land and build and sell those units, or develop and rent those units out. But it has to start with savings. So save for an emergency, but also save for opportunities. And then also start thinking, do I have health insurance? Because if your employer doesn't have health insurance, you need to have health insurance. If you're in business, get that health insurance. So that's where you need to start. And then next is, how can I sustain my standard level of living? And the way that you do that is invest in things that will give you average market returns. So investing in a treasury bond or treasury bill that's giving you 15% at the moment, investing in stocks, investing in real estate, and there's so many different kinds of investment opportunities within that space. It could even be a business. You decide, I'm going to go to Gikomba, I'm going to buy kids' clothes from there, and I'll sell them in toy market. That's a business, that's an investment. So you can do that and you get good returns. And now, once you've done that, you can then now start thinking about taking major risk. So you don't have to have your safety net fully funded for you to start doing the rest, but it kind of just gives you an idea of, where am I starting? What are the things I must do? And how can I invest for those things? And then are you going to taking more risk? Like, okay, how do I double my money? Am I investing in crypto? Am I investing in Forex? Am I investing in a business that is very high risk and putting all my returns in that business, so that then I'm able to create real wealth in that way? But again, I must say, I'm not saying you have to have it fully funded. As long as you have an emergency fund, you can start to do the rest. But make sure that your investing is purposeful. Don't just buy because everyone is buying, or because it's what is the trend, but it has to make sense in your own context and your personal circumstances. Here are the benefits of investing in the stock market. You get returns from dividends when a company shares its profits with its shareholders. You get returns from what we call capital gains. So if I buy a stock at a certain price, and then the company does well, people will want to own that business. And so demand for that stock goes up. And what happens? Price then goes up, and then I can sell. So when I sell, I get what we call capital gains. That's the second benefit. But stocks are assets. So even if I have the asset and I'm earning these 2 things, I can multiply my wealth by getting a loan to do something else. And I can get a loan using my shares to be able to then use that money to do something else, like build units or buy, something for my business that then I can then sell and get more money. So you can multiply your money by owning shares. They are assets and they're great to own. The thing about the stock market though, it's not short term. So you could make money in the short term, but whenever you invest in the stock market, my advice to all our clients usually is take a long-term view. Because there's this thing that happens in economies and we're in cycles. It's cyclical. In industries, it's cyclical. So you'll just find that those cycles can cause prices to come down, even if a company is still doing well. There's investor sentiment. Sometimes people overreact or underreact when there's good news. And so some of those things can prevent the price of the stock in a stock market to reflect its true value. And so if you have a long-term view, you're like, you know what, it's fine. My price may have come down, but I'm earning dividends, and so I can hang on. Now, the last thing I want to say is this season, we are in 2023 as I record this, and prices are lower than I have seen in a long time. Yet companies are still doing well. So the question is, which are those companies that are doing well? And take your time to find that out. You can give us a call at FIDA Investment Bank and we'll be able to assist you in making that decision. But those who invest now, in fact, I'm actually getting my daughter to buy shares because I'm like, she's only 13. And by the way, even in Kenya, you can buy shares as a junior if you open an account with your parent, and you can actually start to invest. And if you have 5 to 10 years, you will be laughing all the way to the bank because we're now talking about just 10%. Stock market offers you the opportunity to make such good returns. It doesn't matter where you are today, what mistakes you've made, what you have or haven't done. If you're looking to begin your wealth creation journey, just start with whatever it is that you have. If you're in debt, work towards getting out of that debt. If you need help, you can get the help that you need to get out of that debt, but just start today. And you'll find in 5 years, you will be in a completely different space than you are because of the decision that you make today. Don't delay it, just begin and don't be discouraged. Eventually, you will get to where you want to get to.